So having the S&P 500 on the left, the Nasdaq in the middle, and the Dow on the right. So we're going to talk about how you can properly utilize and incorporate the Dow into your analysis. Now, something you've learned for about the past 2 weeks is that you don't necessarily need the Dow at all times, right? I've proven that to you because we've really only focused on the S&P 500 and the Nasdaq for our analysis recently. So everything that forms, with the Dow, you always want to take it with a grain of salt because cracking correlations that form strictly between the S&P 500 and the Nasdaq are always going to be higher probability compared to if it is, the Nasdaq and the Dow or the S&P 500 and the Dow. And that's specific to the higher time frame chart, right? But as we can see here, what we talked about yesterday, we had this range high and this range low outlined since the day ended in a consolidation. Right? We said if price breaks through this low here on the S&P 500 and the Nasdaq, then we could likely see, continuation lower, going for these lows right here. And that is exactly what happened. And we'll talk about, intraday for what happened on the Dow that could have tipped its hand in the morning and how price agreed with that. But in terms of what we can anticipate next, if we look here, we see we have an SMT with the Dow, right? So we have this low, or not this low, this low here on the Nasdaq, and these lows here on the S&P 500. We can see both the S&P 500 and the Nasdaq have taken out this low, whilst the Dow has failed to take out this low. Now, is this SMT sequential? No. Why is it not sequential? Time. Partial SMT, right? And if my voice sounds a little bit off, it's because I've done a lot of talking today. So I'm a little bit, worn out from talking. But we can see the Dow has not taken out this low right here. And this low is not the lowest low of the previous week, which is the previous monthly cycle quarter. So should we expect price to respect this SMT? No, we shouldn't. And what can we go ahead and anticipate about, this high up here? High of the week. Now, what also is in confluence with that? This is a symmetrical high of the week. Exactly. So, in order for, the low of the week to form, we could likely see a cracking correlation occur and then price, return back within the range. But until then, right, we expect the Nasdaq to create new lows, right? Take this low, we expect the S&P 500 to create new lows and take this low, and we expect the Dow to take out this low, invalidating the sequential SMT. All right, does that make sense? Potential 4-hour gap could be of use. But now looking at the lower time frame chart for what happened intraday, just doing a quick overview for the tier 2 people that weren't here to see it happen live. But in the live stream, we called out this daily cycle and 90-minute cycle sequential SMT, happening at the same time, right at the specific time that we look to do things in. So right at 9:30, we can see the Dow opened up, traded, taking out this high here, which was the high of the 90-minute cycle, or the 90-minute Q2, and also taking out this high here, which was London sessions high, right? So a two-stage crack in correlation. Now, you're probably wondering, okay, well, the S&P 500 and the Nasdaq didn't trade above the true day open. I thought you said the asset has to trade, above the true open, and then after it does that, then it can continue in the direction it's supposed to go. Well, here is the caveat to that. If you're trading the failure swing asset, meaning you have a sequential SMT, right? The one that does not take out a high or a low. In this case, it'd be the high, right? Notice how the Nasdaq and the S&P 500 didn't take out London Sessions high. If it doesn't take out the high and it creates the failure swing, then it doesn't need to trade above or below the true open, right? It doesn't need to follow that rule. Now, the asset that creates the stop run and takes the high or the low, that's the one that has to follow the rule. So as we can see here, price formed the sequential SMT and then ended up breaking lower. Straightforward, right? Does everything make sense for why price did what it did? Perfect. And whenever it comes to the Dow on a lower time frame chart, right? Think back to what I said with on a higher time frame chart, kind of take the Kraken correlations that form with a grain of salt. Whenever it comes to the lower time frame, typically you'll see the Dow creating most of the Kraken correlations to get alongside price for the lower time frame. Does this count as a two stage when there are two SMTs on the same second candle? Yes, so if you're talking about two SMTs happening, at the same time, yes. That is a two-stage Kraken correlation. There was a daily cycle sequential SMT and a 90-minute cycle sequential SMT happening right at the specific time that we look for. Keep in mind, this is not hindsight. It's a lower probability when a daily cycle and session cycle happen simultaneously. No, it's very high probability. For the symmetrical, asymmetrical, sequential SMT, if asymmetrical is low probability, symmetrical is high probability. If currently asymmetrical SMT formed, then symmetrical sequential SMT hyphen the asymmetrical sequential SMT could be used as a draw on liquidity. Yes, exactly. Think about weighted probabilities, which for the newer people, right, we're going to get into that as well. But answering this person's question, think about it like weighted probabilities. Symmetrical sequential SMT is at a higher weight. You say to take Kraken correlation with the Dow with a grain of salt, how to utilize when we should consider it. Lower time frame. And also right here. All right, we want to see this SMT fail because it's not a proper sequential SMT. So that gives us confluence for lower prices. What do you mean by lower time frame? 9:30. And yes, TTR means timed true reversal, which we're going to talk about all of that. Weighted probabilities theory, time true reversals, weekly halving theory, all of that. Right, it's going to get talked about. So whenever two stages form at the same time, that means it's higher probability. Yes. we're going to learn when the Dow is foreseen distribution and manipulation. You already have. If price is poised to go higher, if all indices, all assets within the index triad is poised to go higher, and you're looking at a 5-minute chart on NASDAQ, the S&P and the Dow, and 9:30 comes about, and the Dow immediately drops lower, trading under previous quarter's low, whilst the NASDAQ and the S&P 500 are holding above, or the NASDAQ is, trading higher. That's the Dow being manipulation. If come by 9:30, the markets are poised to go higher, and the Dow immediately shoots higher, while the NASDAQ or the S&P trade underneath the previous low, creating a sequential SMT. That's the Dow acting as foreseen distribution. Can you in the future show example of both sides? Let's take a look here. It happened today. Let's take today for example. 9:30 came about. What did the Dow do right at 9:30? Trade higher. What did the NASDAQ do? Trade lower. And coming into the day with understanding this right here, if it broke, these lows, then price is more likely to draw lower. What does that tell us about the Dow? Does that tell us the Dow is the leader and we're seeking higher prices? No. It tells us that the Dow is manipulating, creating a crack in correlation. Are saying to use the Dow for SMT only, high probability at 9:30. Yes, that is the highest probability time to use it. Is a 6-hour gap good for retracement and rejection, or be better to wait for a crack in correlation? All depends on your risk tolerance. All right, if you want to be more aggressive, you can enter on the gap. If you want to be more conservative, wait for confirmation. Was a weekly cycle between Friday and Monday the draw because it's Q1 sequential SMT? Remember we said in the stream that Q1 is low probability. Yes, Q1 SMTs are low probability. And the reasoning why we talked about it at the beginning of this week was already mentioned in previous live stream. When did you realize that the draw was lower and not higher? That's what we were expecting during stream yesterday. Well, as soon as the day ended out in a consolidation, right, we said from here it could be either or. Right, we don't really want to pick a side until the market tips its hand. So seeing all of the assets break under this low here that we had highlighted, seeing the restabilization that hinted. Do you think that USA is going to attack Iran? I have no idea. Is the foreseen distribution / manipulation concept only useful or significant for lower time frames? Yes. But for the case where there's a big crash in the market, typically the Dow decouples, like really bad. and will just drop and drop and drop and drop and drop, and then shortly after, the Nasdaq and the S&P will catch up on a higher time frame scale. He said unless it was heavily confirmed, which it was in the live stream. Talked about the weekly Monday by heavily confirming it. Do you only want one more Kraken correlations or two? Preferably with a Q4, Q1 SMT, you want even more than two stages. Sometimes even three. But if anything, this just goes to show how Q1 SMT is low probability. Will today's tape reading be uploaded? Yes. So during a major catalyst, all three will drop. It's just the Dow will do it faster, and that's basically the foreseen concept on a higher time frame. Yep. Well, no. If anything, the Dow will just be dropping and dropping and dropping, whilst the Nasdaq and the S&P are, looking something like this, and then it eventually, becomes one-sided and catches up. Like let's say the Dow was trading under these lows right here, and the Nasdaq was somewhere around here. That's what it usually looks like. For that way higher time frame market crash scenario. Is that tradable? Yes. 100%. Alright, Q1 sequential SMT is supposed to be one shot, one kill. As Day taught us, sequential SMT between Monday and Friday are supposed to be the higher low of the week. Okay. I'll ask you. Go back in and look at every single sequential SMT that you can spot between Friday and Monday and tell me how true that statement is. Whenever you're learning something from somebody, even me, just because I say something doesn't mean it's automatic truth. Always go back into the charts and make your own discoveries. Decide whether or not you want to use what I'm actually saying. And like I said, that goes for anybody. There's a Q1 sequential SMT, low probability, that happens with symmetrical highs and lows. Would you consider it high or low probability? Since one makes it low probability, the other makes it high probability? Not necessarily. The only time a Q1 sequential SMT really works, and even this week it didn't work. But let's say, we're expecting higher prices. If price creates a Q1 sequential SMT, right, and Monday ends up expanding and leaves a gap, this is really the only time where you expect a Q1 to hold. So a scenario like this week, yeah. And even this week, this happened. But guess what? It still failed. We have monthly options expiration this week. Do you consider that a part of your analysis based on my testing? It plays a part in either the same week or the week after. Not really. If anything, it would affect SPY and QQQ. The only expiration that we care about is the futures contract. The options contract isn't really that big of a deal. Well, it could be, but I've never personally looked into it. So Q1 sequential SMT is only viable when a subsequent gap is formed. A Q1 sequential SMT is only viable if there's so many things working for it and working alongside with it that it is almost improbable for it to fail. Monthly cycle sequential SMT the week before. Again, could just add confluence. The only reason why we didn't, really pick a side or be more lenient towards one side over another up here is because there was no bearish cracking correlation up here. Had there have been a bearish cracking correlation up here, then that would have told us, okay, price is likely to, reverse and then go after these lows, these unsymmetrical lows. But since there was no reasoning, that's what caused the confusion part of, okay, we need to, take a step back, wait for something else. So how can we anticipate this move since there's no cracking correlation? The only way you could have really anticipated this move is by seeing this low get breached and closed through on the S&P and the Nasdaq. And even then, that's just simple market structure. Contrary to popular belief, sometimes you're not going to know the reasoning behind every fluctuation in price. It is what it is. Sometimes the market's going to make moves, and whether analysis agrees with it or not, whether real world news events agree or not, they're going to happen. Monthly chart shows the cracking correlation on the higher time frame. We'll take a look. Look at it just between the S&P and the Nasdaq. So, yes, you're right. There is a cracking correlation here with December's high. Now, what is unique about this? Why haven't I talked about this? Well, let's look at it and take it for what it is, right? We can go back and say the reasoning why price delivered lower was because of this. But when did this SMT initially form? Wednesday, January 7th. Okay, the SMT formed, price dropped down a little bit, and then what happened? Traded, broke through this high. What happened the next day? Traded, broke through this high. What happened the next day? Traded and broke through this high. So it took 5 days before price, quote unquote, respected. And things like this, the reasoning why I don't talk about things like this is because this isn't consistency, right? It's not repeatable. Let's say you would have taken this trade. Okay, it would have been stopped out at this high. If you put your stop at this high, it would have been stopped. Okay, let's say you tried to short again. You would have been stopped again. Right? You would have been fighting the market. Drop monthly to weekly, the second stage. We'll take a look. You're talking about this right here. Again, same thing. The Dow already took this high weeks ago, and price has just been steadily higher and higher and higher and higher. So when can we really time it without getting stopped out? Is there a way to anticipate it? So this is what I'm teaching. Instead of trying to solve a problem like that, a tedious problem, instead of trying to solve that, you could just avoid it altogether and focus on only what's happening within the current week. So then you really know the ins and outs. Isn't the divergence between monthly candles not sequential SMT? Surely the next cycle beyond the monthly cycle is the quarterly cycle? No. SMT can be between months as well. Right. You're here to learn things that's consistent. Right? Not things that happen once in a blue moon, like this. And then we can go back and be like, oh, clearly this was the reason why. Which 2025 people, you guys probably had to laugh at that. Right, we want to focus on consistency. The same thing happened every single week, over and over again. Sometimes the market is going to move and we don't anticipate it. Or we take a step back, wait for it to already get in the groove of where it's wanting to go, and then allow the rest of the move to pan out. And if you want to try to fight me on this, if you want to say, Jacob, I think what you're spewing is a bunch of bullshit, you just don't want to tell us. The next time, hear me out, the next time a bearish SMT like this forms, specifically on index futures, come in here, take the trade, show us, and then if it works out, listen, you win. You got it. But if price just continues going higher and higher and higher and higher, and you get stopped out a bunch of times, then you'll see exactly what I'm talking about. Because believe me, in the past, I tried to find or try to get, top tick of the entire month. I tried to do that same thing as well. But doing something like that and basing it off of these larger Kraken correlations and trying to short the index market over a long period of time, it's not a very smart thing to do. What would you say is better? Trading fundeds since you can get capital faster, or trade a small live account? It's really up to your trade style. And also, how serious are you about this? Right? Some people that do this as a hobby and just want to make a little bit of extra money on the side, then a small live account is perfect. But if you're really trying to, run up money quick, then scaling fundeds is going to be the way. Did you ever get top tick of the month? I've done it before, but it's just not something I would recommend you try to do. Now, bottom ticking the month, right? That's more realistic. But top ticking the month, that's you're gonna get smoked more times than not. No, it was 2024 FOMC, end of the year. Supreme Court failed to rule today. Also, Coinbase rejected SEC crypto bill, so nothing coming from the big decisions this week. Fortunate. It was one of the fastest price movements I'd ever seen. Apart from the Trump tariffs, whenever that came out last April, I mean, it was quick. Just a thought, would it be feasible to release core content during the weekend so that we can use the weekend to study and backtest? Well, I have it set up on Sunday. So for Saturday, you can review what happened in the week. And then Sunday, you can learn something new. Now, if you live, in a few time zones ahead of me, then it'll be really early Monday or Monday morning. But on my time, I release it generally midday on Sunday. Don't want to learn a concept and try to implement it the next day. Yep. Truth to that. Whenever you learn something new, think back to what I said previously in the stream, where you go investigate the information. But I think we're going to go ahead and call this one here. So with that being said, I'll ask one more time. Are we all on the same track for how the market should perform? Perfect. So I'll speak with you all again Friday. Good luck and enjoy the rest of your day.